Welcome to the BECU 2022 Member Summit. We're so excited that you've chosen to join this particular session, which is home buying in a highly competitive market, which we have all experienced. So this session is divided into two segments. So you have two presenters. First, myself, Lauren Jurgensen, the BECU Mortgage Advisor, and then we'll be followed by Gay Harper, and she's a real estate broker and a BECU certified agent. So you get to listen to two of us present today and share information. Now, I also want to make sure that everyone is aware that we will have a question and answer session following our presentation. So if you've been in any of the other prior sessions, you're going to recognize that there's a question tab, or you can use the chat on the right side to ask questions as we're going through. So welcome. So the first thing we want to talk about today is we have an agenda. There are 5 things on that agenda. We have home loan options, we have loan approval process, finding your home, making an offer, and the types of property. So with this, we do always have some type of poll or quiz frequently in our presentation. And this is the poll or quiz for this presentation. I'm going to read it to you. I want you to respond to it, so you should have an opportunity to do that, but we'll share those results later in the presentation. So this one is, what is the average amount of time that a home is on the market in King County before it sells? So I want you to give me a guess. Just a guess is fine, but we're going to be very curious about what the answer to that question is. We're going to go over home loan options today, and there are a number of them, so hopefully we're going to cover as many of them as possible. And if we miss anything, circle back around in the question and answer segment. So the 4 different types of home loan options we want to review is, we have a jumbo loan products, which are typically considered a portfolio loan product, and therefore a higher purchase price point. We have FHA loans, and FHA loans are with the Federal Housing Administration. They self-insure for mortgage insurance, so those are excellent loan products for someone that may have had some type of credit anomaly in the past. Conventional loans are Fannie Mae, Freddie Mac mortgage products that all of us happen to lend on. So they're the most popular and the most common. We also have VA loans. VA loans are specific for veterans, and they're ideal for a veteran because they allow you to put 0% down to get into a home. The loan approval process. I know that some of this was touched on the prior session, but we're going to review again. So hopefully this will spark some of your conversation and engagement in our discussion. So we want to talk about the pre-qualification. Pre-qualification is not an approval. So we want to make sure that everyone is very clear about that. It is an estimate of what we think you would qualify for. A pre-qualification, there is no fee. We don't pull a credit report or anything along those lines. So there's no fee associated with a pre-qualification. We want you to share your information with us as truthfully as you possibly can, and it gives us a good sense of where you would fall. Now, the pre-qualification, you can actively go to the BECUHomeLoans.org website, and you can click on Getting Pre-Qualified. That's going to give you a basic general idea of what your qualifications may look like. The conditional approval. If you are actively looking, I want you to get actively approved. So the reality of it is, you're going to actively look, you're going to find property, and you will want to make an offer. To make an offer in the current marketplace, you need that conditional approval. A conditional approval means you've met with a mortgage advisor. They've discussed your financial situation and the uniqueness of your situation. They've reviewed all of that. An application has been submitted. Credit report has been pulled, so we know exactly what your credit scores actively are. We have verified your income. That's going to be pay stubs and W-2s, and it is submitted to the underwriter for their review. When the underwriter does a review, they're either going to approve or decline actively working with BECU, we are going to go for that approval, correct? And then that conditional approval is valid for 90 days. The reason it is valid for 90 days is it is tied to your credit report. Your credit report does expire after 120 days. So we have 90 days to shop, but we still need to retain those 30 days for the closing or the transaction process. Today, one of the best things that we like to talk about BECU is we want to put forth information on our first-time homebuyer grant program. The grant program is actively, I hate to use the term, but it is free money. And if you're a first-time home buyer, the purpose of the grant program, the sole purpose, is helping you, the member, to get a leg up on home ownership, home buying. Instead of you coming in with the 3% down payment, which is the minimum down required, BECU will allow a member to come in with 1%, and BECU will grant you the additional 2% for the down payment. Now, I do want to point out it is 2% up to $7,500. So that does limit your purchase price, so you need to be mindful of that. The grant qualifications. The qualifications are very, very simple, and they are not difficult for people to come across or to meet the qualification. The dwelling must be in a BECU served community. So when I say that, that means it's going to be in the state of Washington. It's going to be in the state of South Carolina, if anyone is visiting or listening in from South Carolina. It's also going to be in the state of Oregon and certain counties in Idaho. So I just want you to be mindful of that. So Washington, Oregon, South Carolina, and specific counties in Idaho. There are requirements here. It says there's a maximum loan amount of $548,250. That's actually been adjusted to $647,200. So talk to your mortgage advisor about that. You will be required to live and stay in that home for a minimum of 3 years. You have to obviously be a BECU member or eligible for membership. We want you to qualify for the BECU home loan. So you do have to qualify, and there are credit limits of 660 and your debt to income ratio. So I always tell people it's not a slam dunk. You still have to go through the approval process. One of the things here is you may use gift funds for your down payment and or closing costs. So if you have parents or grandparents that love you dearly and want to help you get into home ownership, that's a positive. Now, the grant qualifications, they continue. You can see the list is rather long, but we want you to be mindful. So you need to be a first-time homebuyer. What does that mean? A first-time homebuyer definition is an individual that has not owned property in the last 3 years. You will also need to have assets or funds available to cover your portion of the down payment and closing costs. We have to obviously meet the program income requirement. Every first-time homebuyer program available does have some type of income limit. So that's an initial priority for you to consider. We also do require that you complete a home ownership course. We want you to be educated and informed about home ownership and all the aspects that go with it. The maximum down payment is going to be 5%. The minimum is 3%, but the maximum down payment for the grant program is 5%. If you're in a position to give us 10, 15, or 20% down, then the grant program really isn't necessary for you to get into home ownership. And remember, the purpose of the grant program is to help BECU members in good standing get into home ownership. So it's literally just a step up, and it's for a primary resident only. So preparing to apply. I know some of this information was covered earlier, but when you're ready to speak with your mortgage advisor, I want you to be prepared with your documentation and information. So the first thing on this list is we want to know where you've resided for the past 2 years. So that is your home address. We're going to need your Social Security number to pull your credit report. We want to know about your employment or academic history for the past 2 years. We need your income information. That's typically going to be your W-2s and pay stubs. We're interested in liabilities. We're going to pull that information from your credit report. Your credit report will give us whether you have a student loan, a car payment, or any revolving debt. We also need to verify your assets or your liquid assets for those funds to close. That's going to be your down payment and your closing costs. Now, additional income. Some individuals do have additional income. This can come in the form of Social Security, pension, annuity, child support, or disability. All of that additional income is valid and should be shared with your mortgage advisor. The last question here asks about real estate owned. Typically, first-time homebuyers haven't owned real estate, but sometimes that comes into conversation, and so we always want you to share if you've ever had ownership currently or in the past. Oh my goodness, see, we did such a great job, Gay. I'm sticking to our time, which I know is a big priority for the two of us. Gay Harper is the real estate agent. She's going to cover basically her aspect of presentation, and then when she is done, we'll have time for question and answer. So Gay, I want to turn it over to you now.
And good evening, everyone. Thanks so much for joining us at this BECU Summit. It's really wonderful to have so many people here with us. My name is Gay Harper, and I am a real estate broker with Berkshire Hathaway here in West Seattle. And I've been doing real estate for 17 years now, and I work with quite a few first-time home buyers. So let's move on, get started with this quiz that we talked about just a few minutes ago. What is the average amount of time a home in the market remains in King County before it sells? So surprisingly, the answer actually is 5 days. 5 days on the market is the average amount of time. I think that's, well, to me, it's normal. I understand that because I work with that every day. I'm not sure that you guys would kind of get that, but it's quick. It's quick these days because houses are in short supply, so there's high demand for them. So. And moving on to the next slide, maybe. Next slide. Okay, first thing we want to do when looking for your home is to consult with you. I'm going to assume that I'm going to be your agent just for discussion purposes this evening. It just makes it easier to talk about it that way. So let's sit down and talk about what you're looking for, set some expectations so you know what's going to happen during the whole process. And make a list of what you want and what you need, the minimum of what you have got to have for minimum 2 bedrooms, 1 bath, for example, or what you'd really like to have, or what you would dream of having. Those are nice things to have as well. So let me know what your time frame is. I need to know if your rent is going to, or excuse me, your apartment is leased until the end of June or the end of September or the end of May, just so we know what kind of a time frame we have and how much of a hurry we need to be in. So purchase timeline and contingencies. I need to know what's going on with you, so just keep me posted on everything. Most people start looking online on Zillow or Redfin or any of 100 different websites for houses that they want to look at. So it's really easy to get an idea of what's out there in your potential price range that you might want to take a look at. The mother lode source that we have right now is the multiple listing service, or we abbreviate it as the MLS. That is the major source of all homes that are for sale and listed in this area, this Tri-County area. So that's where we always start looking for homes. Now we're going to talk about making an offer, actually the mechanics of what it is to make an offer. So you'll already have your conditional approval letter. I want you to have that in hand before we even get in the car to start looking at houses. That's super, super important because that'll tell the seller that you are ready right now to purchase his home because you are already on board with a lender and you already have your financing on board. Inspections and other contingencies. Nowadays in this market, this crazy, crazy market, buyers don't have much time to do an inspection, but they oftentimes will do them before they even make an offer, or they will sometimes use an inspection that the seller has provided. That is happening more and more these days, which is kind of a nice thing. The earnest money deposit is something that will need to happen only after the seller accepts your offer. I want to make sure that's really clear for everyone. You don't have to lay out any money at all until after you are under contract, after the seller accepts your offer. And again, the more the better for earnest money. It tells the seller that you are sincere about moving forward and that you have the financial strength to do that. So that's really, really important. The offer will also tell the seller what your price is that you are offering, whether it's just the list price or whether you are going to escalate, what we call this escalate, and offer even more in this time of crazy market and multiple offers. So a lot of times we will use what we call an escalator addendum, where you will say that you will pay X amount of dollars over the next guy up to your maximum of whatever it is that you decide. So the offer also includes what the closing date would be, whether it's 4 weeks, 5 weeks, 6 weeks, 3 weeks, whatever works best for the seller and for your lender to be able to have enough time to close on the transaction. We will have Q&A toward at the end, so if you have questions, hold on to them until we're there. Okay, different property types that we look at, different depending on what someone needs or wants or is looking for. Condominiums are very common nowadays. They're just like an apartment. It's multiple. And a single family residence is a single family home, and they can be from small to very grand, and that's most often what people seem to be looking for. Multiple family residences are not very common at all, but they are very, very sought after by investors. People with a lot of money often go for multifamily residences, such as a duplex or a triplex or a fourplex. They are not very common on the market right now since they are so desirable, and investors seem to hold on to them for a long time. All right, any questions? Let me have them.
Hi, Gabe. Thanks. Hi, Lauren. Thank you so much for that presentation. Lots of such great information. Thank you. Yeah, so we did have a question come in. Gabe, what is the average amount of time a home is on the market for Pierce County before it sells specifically?
For Pierce County, I imagine it is probably pretty similar. I don't work in Pierce County very often, but I imagine it's pretty similar. I would say between 5 and 10 days, I would think, down in that area. Tacoma, et cetera, et cetera. Yeah, it's pretty hot down there as well.
Okay. Another question that came in. Oh, sorry, go with that.
Sorry,
go ahead. Would a duplex be considered a primary residence if you live in one person was asking?
Yes, it would. Yes, it would.
Perfect. Thank you. And a question we had before is actually, is the 30-30-30 rule still applying? Does it still apply in this crazy market?
I don't think that it does, personal opinion. Everybody's situation is very distinct and very unique to themselves, and there are lots and lots of variables. So if you don't know where you fall, talk to your mortgage advisor to get more specific information to go with that. That would be my recommendation, just because of the fact that their situation is very different than someone else's. So the 30-30 rule was very generically placed.
And could you, just for reference sake, not everybody might know what the 30-30-30 rule is. Can you kind of go over that and what that is real quick?
Oh my goodness, girl. You're asking me lots of questions here that I would think I would know. Now, the other question that I have, though, I did want to mention, circling back with that question about the duplex as a primary residence, they need to know that a duplex is a primary residence that does qualify, but you cannot purchase a duplex and consider it a secondary residence or a vacation home. It would always, always be different. So there you go.
And another question that came in actually earlier in the presentation before was, can you explain escrow shortage? And will their total monthly payment change over time, even with a fixed mortgage? Is that something you'd like to answer?
Oh, that I would love to answer. You know, Ruth, I actually had a member that just today called me and asked me that exact question. So I'm really curious if maybe they're here at the Member Summit sharing that information again. But an escrow shortage is extremely common. People need to be mindful. Your principal and interest, which is the mortgage itself, that payment is not changing. An escrow shortage occurs because of either property taxes or your homeowner's insurance premiums have gone up, which is causing a shortage in your escrow or reserve account. So escrow shortages are very common. BECU will always give you the option to pay the shortage, to pay the difference, or they're going to go ahead and just increase your monthly payment to offset that shortage over that period of time. But it's very common, and when mortgage property values continue to go up and property taxes continue to increase, it's something that you should anticipate and plan for, because it's kind of a reality of homeownership.
Thank you so much. Another person was asking, how much should you offer in earnest money? What's kind of a general rule for that?
Okay, Gay, you can answer that one. Jump right in.
Thank you. Earnest money, again, is the more the better. But if you can do around 3%, 2.5% to 3% of the purchase price, that's a nice, good, sound number. There's no set rule on it, though. Sorry.
Okay. So that's a good range. Absolutely. Another question is, any hints for buying a condo? Like how to make sure it's well managed and maintained? What are some ways I can actually find out before I buy it?
I can talk on the financing side, but Gay, do you have some thoughts on that? Maybe not. I'll start sharing. How's that? Gay can jump in whenever she wants. So with the condominium,
I do. I was just waiting.
Oh, okay.
Oh, go ahead.
Gay, do you want to start, and then I can follow up on the financing side?
I think we may have lost her.
I'm just going to keep talking. Just listen to me, right? When you're looking to purchase a condo, I think that is the most important question to ask, because we all want to know the health of that homeowners association. The health of the association is going to dictate whether or not you have a special assessment that will come up down the road. A lot of times it dictates how the property has been maintained and cared for over time. And it's something that could financially make your transaction fall apart, because from a lender's perspective, if that HOA does not have sufficient reserves and has not maintained the property appropriately, or there's significant special assessments that are coming up, or if the HOA is involved in some type of a lawsuit, all of those are triggers that could cause your transaction to fall apart. So the health of the HOA is very, very important. So Gay, what are your thoughts?
You as a consumer have a right to receive any and all information about that homeowners association that you can get your hands on. So once you are under contract, meaning once the seller has accepted your offer, then the agent that works with the seller will provide information for us, the meeting minutes from the homeowners association for all of time, the budgets, the financials, the bylaws, the codes, constrictions, and CCNRs. All of that information you have a right to look at. And the meeting minutes are important because they will say whether or not a special assessment has been discussed, for example. If there's monies that have to be paid in future, do you want to be a part of that? Do they know how much that's going to be? You need that. You need all of that information. So you have a right then to say, yes, I want to move forward with this transaction. The HOA looks good. Or nope, this looks a little bit terrifying to me, so I'm going to back out. And you would be able to get your earnest money back in that case.
Wonderful. Thank you so much. Another question we have is, do you factor in rental income if pursuing a multifamily?
For qualifying, you absolutely do. So if you're purchasing a duplex or a triplex or a fourplex, and one of those units is your primary residence, the rental income or from the other units can be part of the conversation for qualifying. Sometimes it's not needed, but it's absolutely can be part of that picture.
And another question, with the interest rate increasing to 0.5%, can you let them know, so one person was asking, is there any chance of buying a house since the interest rates are jumping up?
I say yes. I'll share some information personally. My son and his wife are looking to buy, and they're asking those exact same questions. Is this a good time to purchase a home? One, we all need housing and shelter. Investing in real estate is a strong place to put our money. Nobody's making more land. I'm going to just tell you there's a finite amount of land available. There's not going to be more made. So investing in real estate has strong upsides. Now, the increase in interest rates, we have been here before. So people should not be panicking about, oh my goodness, interest rates are currently in the 5% range. We experienced this back in 2018. So everyone in 2018 that purchased at that point of time has since refinanced, and that's always an opportunity to move forward with. People ask about the housing market, and Gay may be able to speak to that, as whether or not we think there's going to be a softness in the market moving forward. But all the information I'm getting is no, not necessarily in this Seattle, Western Washington area. But Gay, what are your thoughts on that?
I don't see any real significant slowdown to what's happening in the market right now, because the inventory, meaning the availability of homes for sale, is still really low, and the number of buyers is still quite high. So it's going to be rough for a while. I don't see any end to this, but keep trying, you guys. You just got to get out there and try.
Wonderful, thank you. Another one, can you explain what a bridge loan is?
I can talk about that. Bridge loans, basically BECU does not do bridge loans. Bridge loans are usually provided by a hard money lender. They're usually typically quite expensive because those hard money lenders do have a fee associated with, and the temporary period of time for the bridge loan, there is a higher interest rate. If you feel that you're in need of a transitionary financing to get you from point A to point B, and you have a lot of equity in your current home, there are opportunities to talk to us at BEC about ways to structure that. But I encourage people, talk to your mortgage advisor to see what your options actually are, because you may or may not need that bridge loan depending on what your situation is. Or there may be an additional financial tool where BECU can help you in that process. So BECU, if you're transitioning from one home to the other, BECU, for many of our loan products, we will allow for a more extended or expanded DTI, debt to gross income. Normally it's between 45 and 47%, but in situations, depending on the scenario, we'll go to 50 to 55% DTI. So I do encourage you, talk to your mortgage advisor. They're going to give you the very best counsel, and you're going to see the greatest level of success versus working with an actual bridge loans. Now, there's variables on those bridge loans, so it just depends on your situation. I know there are individuals that may have a great deal of money with their financial planner, and those financial planners will issue a bridge loan to them, right, off of the assets that they have on deposit. So everybody's situation is different. Talk to your mortgage advisor and see what your situation looks like.
Wonderful, thank you. Another question is, what are my options in saving my money if I had already put earnest money down on a condo, but they're finding that there is likely a special assessment coming up, or the HOA is not taking care of the building well?
That's a hard one, just so that you know, because of the fact that if there's a special assessment coming, the HOA is typically going to give you one of two options. You can pay the special assessment in full, or the HOA is taking out a loan to cover that special assessment, and you'll have a portion of payment specific for what your property or your unit square footage is, whatever that might be. So the reality is you're going to need to be prepared to handle an additional payment. Those special assessments can be very, very expensive. So I want you to be mindful of that. it could be a possibility that your lender, if they're aware of this special assessment and if it's excessive, depending on your down payment, some lenders may say we're not going to lend on that particular property in your situation. So saving is going to be something that you're going to have to be very proactive about. If you've been there a while, if you are a homeowner and a special assessment comes along, many times you could potentially refinance or obtain a home equity line of credit to pay off the special assessment and utilize it to roll it all into one financial element. But again, your situation is very unique. So I would encourage you to talk. If you've already put earnest money on that property, you have a mortgage advisor, because I'm assuming you're getting financing. I would give them a call and talk about those options.
Wonderful. Thank you. Another question is, can you guys just speak to what the best advice would be, especially in this hot market right now, of working with a real estate agent and how to find a good real estate agent?
I can speak to that. Gay Harper is an excellent real estate agent.
I can attest to
Thank you very much, Laura.
So, just to put that plug in there. But also, BECU, depending on where you're looking to buy, right? We talk to members all the time. Some are looking to buy in Oregon or the Tri-Cities or Spokane. BECU has a realtor reward program, and we can get you connected to agents that they are very seasoned, very experienced, very similar to Gay, where they know the ins and outs of getting you into contract. So BECU can help you with that if that is aligned with your preference. But I do know Gay's information is available on screen. So I'm going to tell you, if you're looking locally, I have worked with her on many transactions, and she does an incredible job. She's a very strong advocate for you, especially as a first-time home buyer.
Thank you
Wonderful.
for that, Lauren. I really appreciate it.
Well,
Also, if you go online to look on the BECU site and you are applying for your home loan on that site, there's a question there. They will ask you, do you have an agent? And if you say no, then they can direct you to an agent via the Prime Alliance Real Estate Services program that has some lovely benefits for you.
Wonderful. Thank you so much for answering that question. I appreciate it.
That way.
There we go. Another question is, would under construction homes be a good decision in this market?
So sure. I'm assuming that they're meaning, you know, a new construction home that's already being built, correct?
Mm-hmm. I'm thinking they are talking about new construction as well. Mm-hmm.
So Gabe, what are your thoughts on that one?
I think a new construction home is as good a choice as any if it fits for you as far as area and amenities and size, and does it work for you in a lot of different ways. Why not? Some people really like to have new construction, and other people prefer mid-century modern. So there's all kinds of different choices for all kinds of different people, but there's no reason not to shy away from new construction and have an inspection if you can.
Beautiful.
The other thing I'll mention about new construction is the fact that most new constructions are further out. So you may be in a less competitive situation, not fully non-competitive, but maybe a less competitive situation. Maybe you're competing against 2 or 3 other borrowers versus 17. I don't know. Yep. But I noticed that because some people are looking for a residence immediately, and new construction usually can be 3 to 6 months out.
Lovely. Thank you so much. And another one, what is the current recommendation for how much cash one needs for a down payment on a home?
So the minimum down payment is going to be 3%. My preference is a minimum of 5%. But 3%, if you have excellent credit, that is totally manageable and doable. 3% is the greatest level of risk to the lender. So some of the requirements can be a little bit more stringent, like their DTI, where they're not going to go with an expanded DTI with a 3% down. So 3%, 5%, 10, whatever it is that you have available to get approved and to get you into that home ownership, I think is where you should begin.
And does BECU have long-term lock options for homes under construction?
We do, absolutely. Our normal lock period for a purchase is 45 days, no fee. Now, we do have extended rate lock options, and there are fees associated to those. So it just depends on what you need. Do you need a 60-day, a 75? Are we talking 90? Or are we further out than that, right? So if you're looking at new construction, we always want to have that conversation. We also want to have a conversation on what's happening in the current rate environment, because maybe paying to have an extended rate in a declining rate market may not be to your benefit, but BECU also does have a rate float down option. So we've got you covered one way or the other.
And one question we had before was, is it better to go to a brokerage or to a bank or credit union for a home loan?
You know, Ruth, I actually wrote that down, and I'm going to tell you, everybody has their own preferences, and there are certain situations that dealing with a brokerage may be beneficial to you. Now, in some of those situations, brokerages typically will have a variety of mortgage products that may be helpful if there's been some type of strong credit anomaly that BECU is not able to overcome. But I personally love BECU. BECU does not have any lender charges, so no origination fee, no underwriting fee, no doc prep fee. So my money to me is quite personal. And if you're looking at giving with a down payment and your closing costs, all those hard-earned funds, everything that you can do to keep some of that in your pocket could be valuable. BECU services your loan for the life of that mortgage. So that's the other thing. We're in a long-term committed relationship with each of our members that have their mortgages with BECU. So those are things that I generally love and enjoy and respect BECU for. But it just depends on your situation and circumstance. Just like everything, certain financial tools could be more beneficial in certain situations. So be mindful of that. The best thing about BEC, though, if you come to me and you have an option or something that I am unable to address, we want to get you into home ownership. So we'll do everything we can to help encourage you, and even help you with some of our resources, because agents will typically also have other resources to share if there is a financing scenario that we cannot manage appropriately. So, but BECU is my favorite. I encourage people to do that. My son's looking to buy in Idaho, just so you know, and BECU does lend there. So I want him to go with BECU. So personal plug. Love it.
Wonderful. And one last question for you all. What can I do to make my offer as appealing as possible in this market?
Okay, Gay, that might be you.
Okay, I'll take it. So you want to go in as strong as you possibly can, as much of down payment as you can, as big of earnest money as you can, the quickest close, the least amount of contingencies. We want to make it as easy for the seller to say yes to your offer as possible. So your agent can find out what the seller's looking for, if they need a quick close or they don't care about when the closing date is, for example. You want to make it as easy for the seller to say yes as possible. So make it strong in every way you can. Just do your best.
Wonderful. Thank you so much, everybody. Thank you. Thank you, Gay. Thank you, Lauren, for presenting. Really appreciate it. Lots of great information today. And thank you, everybody, for your wonderful questions. And we'll look forward to seeing you back for the next presentation after this. Thanks, everybody.
Thank you, guys. Appreciate it.
Thank you.